Bar Rules Series. Community Property.
Presumptions. California is a community property state. Community property, CP, is all property, real or personal, wherever situated, acquired by a married couple while domiciled in California. Separate property, SP, is all property acquired before marriage, during marriage by gift or inheritance, or after the end of the marital economic community, and all rents, issues, and profits of such SP. The presumption of CP may be rebutted by tracing, title, or transmutation. Quasi-community property. Quasi-community property, QCP, is property acquired by a married couple while domiciled outside CA that would have been CP had the couple been domiciled in CA. It is treated as CP upon death or separation. Putative marriage, quasi-marital property. A putative marriage arises when one or both parties have a good faith belief in the validity of the marriage, but the marriage is legally invalid. The innocent party is deemed a putative spouse, and any property that would have been community property is classified as quasi-marital property, QMP, and treated as CP for division purposes. QMP rights end once the putative spouse learns the marriage is invalid. Valid marriage. A valid marriage requires 1. The consent of two parties, 2. Both of whom have legal capacity, and 3. Compliance with formal legal requirements, including obtaining a marriage license and participating in a solemn ceremony. End of the marital economic community. The MEC ends when the couple lives separately and apart, and at least one party has no intent to reconcile. Rebutting presumption. Title. Form of title can be used to rebut character as CP or SP if the title is inconsistent with the applicable presumption. Title in one spouse's name does not rebut the presumption of CP unless the form of title is evidence of a gift to the spouse, such as when the acquiring spouse takes title in the other spouse's name. Title as joint tenants rebuts the presumption of SP, and the property is considered CP. Tracing. A change in the form does not change an asset's character. Where SP funds are used to purchase property during the marriage, the property remains SP. Where CP funds are used to purchase property taken in one spouse's name, the property remains CP, unless the form of title is evidence of an intent of a gift to the spouse. Commingled bank accounts. A bank account containing both SP and CP fund is presumed to be CP. The spouse claiming an SP interest may rebut the CP presumption by tracing the SP funds using 1. The direct tracing method or 2. The exhaustion method. Transmutation. Spouses may agree to alter the character of property. SP to CP, or CP to SP. To be valid, the agreement must 1. Be in writing, 2. With an express declaration of the ownership change, and 3. Signed by the spouse giving up their rights. Marital gift exception. A gift between spouses which would otherwise be considered CP because it was acquired during the marriage, will be considered the recipient spouse's SP if it was a gift of a personal nature and was relatively insubstantial in value given the economic situation of the couple. Premarital agreement. Prior to marriage, a couple may agree to alter the community property presumptions. Under bonds. To be enforceable, the agreement must be in a signed writing, voluntary, and not unconscionable. To be voluntary, the parties must be 1. Given at least 7 days to review. 2. The opportunity for independent legal counsel. 3. Written disclosures. And 4. In a manner free from duress. The disclosures must reveal the full extent of the property. Contributions and improvements. CP increased by SP. Contributions under ante Lucas. Under Lucas. At death, all joint property is presumed to be CP. Any SP contributions towards the CP are considered a gift to the community. Under ante Lucas legislation, at separation, joint property is still CP, but any SP contributions are entitled to reimbursement if they were for down payment, improvements, or a reduction in principal. SP increased by CP. SP business gains. When a SP business gains in value during the marriage, the benefit to the CP depends on the contribution of the SP spouse. If the gain was due to the spouse's skill, this skill is considered a CP contribution. The SP gets a reasonable rate of return, but any additional growth is credited to the community. Pereira approach. On the other hand, if the growth occurs due to general economic conditions rather than the spouse's efforts, the community is reimbursed for any unpaid salary to the spouse and the remaining increase goes to the SP. Van Camp approach. Moore, Marsden. Under Moore, Marsden, if CP funds are used to pay down the mortgage on a SP home, the community gains an ownership interest in the home, based on the amount of principal paid. CP business gains. A business acquired during marriage is community property, CP. However, if 1. A spouse contributes labor, which is separate property, SP, to the CP business after separation, and 2. The business increases in value after separation, a court must allocate the CP and SP portions of the increased value using either the reverse Pereira or reverse Van Camp method. Special classifications. Personal injury award. Even if the award is given during the marriage and is presumptively CP, upon separation the recovery is awarded to the injured spouse. The community may get reimbursement as justice requires. Pension. Time rule. The community has a proportional interest in the pension of a working spouse, even if the pension is paid after separation. The proportion is based on the ratio of time the spouse worked while married. Stock options, bonus. The community has an interest in stock options or bonuses, if they were granted as compensation of work performed during the marriage. In such cases, the time rule for proportionality is applied. If the payments were made as an incentive for future work after separation, they are considered SP. Education. A degree is not considered CP. However, the community may be reimbursed for expenses if the degree results in increase in earnings, unless the degree was obtained more than 10 years prior to separation. The other spouse also received an education paid for by the community, or there is less need for support due to the degree. Debts. The community is liable for all debts incurred before or during the marriage by either spouse, but the earnings of the non-debtor spouse are protected from premarital debt if held in a separate account. Any SP debt must first be satisfied by the SP of the debtor spouse, then the CP. The SP of the non-debtor spouse is protected except for the necessaries of life. Management. Fiduciary duty. Each spouse owes the other a duty of good faith and fair dealing, including disclosure of all material facts and transactions made with community assets. Power. Disposition. Either spouse has the power of disposition of CP, but if less than fair market value, requires written approval. The other spouse may seek an accounting and reimbursement for loss to the community. Real property. For real property, both spouses must sign a sale or lease agreement. If one spouse conveys the property to a bona fide purchaser without notice of the marriage, the other spouse may void the transfer within 1 year. If the purchaser had notice, the other spouse may void at any time thereafter. Disposition. At death. At death, the surviving spouse keeps their half of the CP. The decedent spouse may dispose of their half of the CP and all of their SP through a will. If the decedent spouse dies intestate, the surviving spouse gets all of the CP, and the SP is distributed by the rules of intestate succession. At dissolution. At dissolution, CP and QCP must be divided equally between the spouses. The court does not need to divide every property into equal halves, but may allocate property to achieve a balanced division of value. Taking against the will. In California, as a CP state, there is no elective share option. However, if the decedent spouse disposes of the entire CP, the surviving spouse may enforce their CP interest in lieu of any gift in the will.